And what was it? CPI was not too big of a deal this morning. I hope you guys were all safe with all the accounts. But we've had some productive things kind of popping off over the weekend. I think I found a backward channel in. I got it. Let's see. Okay. Backward channel into YouTube. But I got ATM to manage my future trades this weekend, and that's huge. For those of you guys who don't know, like that's for the most part how I've traded huge. I mean, hugely for the vast majority of my trading career is more closer to kind of intraday than maybe, let's see, it's opening right now. But seriously, I'm so excited. So I've got a couple of seconds here until that first 2 minute candle's formed. But NQ. I'm going to close this out. We are recording. Got every single thing that we need. And poof, here we go. That's yesterday's high, yesterday's low, this morning's high. CPI didn't do much. I was really hoping for another big spike and then a drop. Still looking for now what's going to equal to be like a 5% drop. But we just have no reason just yet. At least not yet. That's the low of pre-market, low of high of pre-market. And then gold. I had these marked up a little bit already. We had to wait until the news was done. And that's literally right there. And then ES shouldn't be too far off. And then we'll put on our indicators. But overall, let's see. Really surprised that CPI only wicked us down and really didn't go very far. Not in comparison to the big move prior to, but we'll see, we'll see. We've got everything done. Cool. So down in smaller time frames, we already know we're pushing up hugely on all the indices. Gold is currently pushing down a little bit, but let's go take a look. 2 minute time frame. There's quite a few people who are having a crap ton of success doing just so many awesome things with these cool indicators we've got. I'm gonna turn off 8 a.m. Keep that one on. We're good there. We'll let that update maybe. But here's ES. 2 minute time frame. We wait. We wait. And now everything wants to freeze up. Good morning, William. Good morning, everyone. This is kind of what I'm hoping to see is this bit of a pull down. So I'm going to make sure that I'm good to go otherwise from mirroring from my Apex to about 7 or 8 different accounts. Right now, I'm really just focusing on getting those couple of small gains. Don't change. Let's see. Kind of a tech day. Bear with me. Should be in this if you're not already. I can't be because I got logged out of all my other stuff too. What a glorious, glorious Tuesday. And God was like, yep, nope, not today. I'm almost ready. Almost. It's a lot of stuff. Gold is actually selling down too. And Q is the best still. Still working on getting in. Still. But I am looking for a sell here. So what a non-starter for a day. Gotcha. Coming looking to come take out pre-market lows. I'm finally able to get in. It is going to be mirrored pretty effectively. So I'm in. Move this out of the way a little bit. Kind of let that keep going where it needs to go. probably be marketing more down there. Finally, one. We're in one. I can live with that. Pulling that off screen for a second. We're in NQ, up $100. Now I gotta log into some other things because everything logged me out. Every single thing. It's glorious. And then I've got my ATM on MT5 able to literally trade, and it's actually going very well, very well through Traders Connect, like incredibly well. I'm very happy about it. Let's go to account 69 here. We've hit 50% of that opening range. Looking for at least 100, but are yet to take the lows. But gold is also pushing down, so I'd definitely play that carefully. I don't think gold should be at the same time, but that's kind of the market we've been in. Gold was smooth, easy 2-minute breakout. No nonsense, no fuss. 1, 2, 3. So 1.5 to 1 if managing on the other side. It's almost a 2.5 to 1 if managing from the 50% ratio. Let's see. Yes. We didn't really mark up YM, but let's find out. YM is tanking. It's already taken this low. Too easy. Too easy. And oil's all over the place. So back to crude. I'm back to NQ. We're pulling up right now. There's not much of an imbalance here to come tap, but that does look like what we're trying to do. Very thin BB1 we just kind of tapped into. We want to get through this breaker blocks. We really want to close below this point, and then we're off to the races. So not too bad. Now that we've already retested, though, I'm definitely probably not going to be managing past that 50% portion. I'd really like us to come down into here. But obviously, we're going to be locking, scaling, trailing, or protecting, whichever way we want to do that right here. That's a great JGS signal, too. 2-minute time frame. We broke out, we've retested. So one perfect, smooth, easy peasy trade. Hopefully gold turns around now. Because if gold starts to buy, it'll really give this legs. We need to get below the 155s and stay below there. $155 and stay below, but we'll see. How was your guys' weekend? I mostly had a really good time. A little low key, so much rainy weather here. How's everybody in Texas? All the things in between. Why do we wait for this to play out?
We've got wildfire smoke.
A lot there.
Air quality index has been over 200 for a few days, and it's sitting mid hundreds right now.
Where's the fire from, Scott?
Northern Canada, long way away. Just the winds happen to be just right.
To bring it all that far down.
Yeah, so it's very hazy. And occasionally smells of smoke, but sometimes you can't really smell it. But just this sort of flat glare. Rainy today though, which might help.
Hopefully, yeah. Hopefully it gets a little bit north of you guys. Hopefully. That's the idea. You see my post in the Discord about I was managing I did what is it, tick trader. Now I'm managing pretty aggressively. This popped pretty quick. So this is automatically kind of trailing with me. I don't mind where I get knocked out, guys. To give you an idea, on the big accounts, that's $600. On the smaller ones, it's 180. And then I'm out. And I don't have to worry as much about Apex's rules about this stupid stuff. So could I hold that for more? Absolutely. But for the purpose of prop firms, that's fine. Because then my drawdown doesn't exceed like approximately how much I gained. And then I'm not breaking any of the massive amount of rules. And since I didn't have anything else on the day, let's see if I can try this. That's the one trade. Just one trade. Done. Took 5 minutes. I didn't trade 8 a.m. because when we came in here, I was coming back from my walk and every single thing else, and it was like, ugh, everything was disconnected. I thought I got it until I went to go start the Zoom, and they were like, yep, nope, can't play. Cannot play today. But perfect. Easy peasy trade. We swept pre-market low. I'm not going to be super sell side heavy until we close below pre-market low and preferably, which is going to be a far away mark, yesterday's high and yesterday's close before I'm really sold on the we're selling, because otherwise we are just tearing to the upside. And if you look at the 1 hour time frame, and I was tracking this even last night. Turn off the indicators. This was just, I looked at this morning, but how this played out, man, we popped right back down to yesterday's close and then just kind of edged up all overnight. Just nowhere to go. That's what we did. So beautiful. We hit the target that we wanted, easy peasy. No guessing, good management. And it's hard because if this were to keep taking, we'd say, oh my gosh, we should have held. But that's why I have the management on. So, but over the weekend, I got ATM managing my Take Profit Trader and my Tick, I think it's Tick Trader. I don't know, check the link tree. All those are in there right now, and they're going to soon be on the website as well. But managing, and it does pretty well through Traders Connect. So Traders Connect is in the link tree as well. Um, Honestly, I could not be more excited because on there, I mean, let's just think about it. Maybe not as much. We could do it with breakout strategy, but take JGS for example. So choppy parts suck. I mean, there's no way around the suck here. You can manage too tightly, but that's not going to help any. Overall, though, you're going to catch a few of these, and I'm going to get like the 5 or 7 to 1, and it'll still be out on the day. And then I'm going to catch a few of these that are like break even plus. But in the course of 100 trades, as long as I'm averaging a 60 to 70% accuracy, which I do, at least on the bigger time frames, um, and figure some of them are 7 to 1, some of them knock you out at a 2 to 1 or a 0.5 to 1. The overall net, oh, I even have it up on the spreadsheet too. The whole overall growth is insane. It's kind of beautiful. Kind of geeked out because I miss trading effectively. Got one trade in. If you need another, we've already taken this low here. We've taken it on ES, but we stayed there. Gold, I'm a little apprehensive. I would want to be looking for buys. And we just now got a kind of a break of structure. Well, what is that? The kind of baby market structure shift. I think we have to close above here before that to count. And there's nothing else really to test into, but we'll see. I would still be kind of biased on NQ. That's what I'd be tracking from the three of these at least. We took the liquidity to the downside. So we'll see. Beautiful trade though. Kind of beautiful. Still making waves. Barely. I barely caught that trade. I was only almost going to miss it because my entry was further down. My entry was not as good as it should have been. But we had all these wicks up that gave me some room to get in. Beautiful though. If I can pull up, I'm guessing that one trade is probably up 3 or 4 grand on the day. If no, it's got to be up like 5 or 6 grand. And my trade Zella doesn't even have all my accounts. It just has these little things that I'm trying. So it's intentionally lowballed just to kind of put it in perspective. Because for a while there, I was being able to get like $100,000 a day and an $80,000 day. But again, you can't sustain that with prop firm rules. So kind of backing off of that at least for now, at least for right now. But we'll see. Gold is still pushing to the downside. Nice little flag pattern. That's it. That is it. Quick, painless, easy 5 minute trade. Super, super easy 5 minute trade. Did not trade AM, did not trade last night. None of the above. So who's next? Who's got comments, questions, things that you want to go over? I have been really good at working on the number of trades per day. I'm testing things, which I'm kind of trying not to include into the TradeZella into the other things because that's testing, right? But honestly, a couple of trades in a day is all you need. If you're up, you're up. If you're down, and go on with your life. So NQ is golden.
So, question for you. With ATM running on MT5, is your management getting translated through the copiers now?
Oh, through the copiers in 6FTC.
Well, no, no, I'm talking about into your prop accounts.
So
Because you
from
were
what,
having trouble with managers or
yeah,
with copiers rather reflecting that information.
I'm I don't want to speak too closely yet on how the copiers are going to be working. But in terms of the management aspect of ATM, that works great. I will say the reason why I don't talk a lot about Tradeify is if you go link 10 accounts, Tradeify performs the least out of all of them. Like, but I did try it with Tradeify because those are accounts that I had already rebuilt and weren't really trading. They perform the least. So I tried it with Tradeify, and they still come in later than they do anything else than any of the other brokers, 10 to 1, literally way, way later and higher fees too. But everything works. So like I watched the stop loss and the way I have my Traders Connect set up, just so you guys know, I don't have my Traders Connect set up to mirror the stop loss or the take profit because we know I don't care what anybody tells you that the variations with brokers, slippage, spreads, futures or not, it's not good. So it's execution only essentially. So when I entered, it entered pretty seamlessly. And when the ATM exited, it exited pretty seamlessly. So that much I
Okay.
can kind of confirm with Traders Connect, not a lot of problems. I do want to also try from Forex to futures, but I did a small sample test of that from Trade Smart to um I didn't use Tradify anymore. I freaking hate Tradify. I don't even use them. Don't talk about them. I have one more account with them that I'm not gonna redo. But then I took because I knew it was working, then I put it on accounts that I am managing and are funded or do have, bigger equity balances. So then I used Trade Smart using Traders Connect through ATM into Take Profit Trader and Tick Tick Trader. And again, that worked really, really well. As long as it's mapped right. So the things that people are probably getting wrong are A, it's mismapped, or B, they want to include the stop loss and take profit. In my opinion, you shouldn't be including the take profit and stop loss ever if you're using any kind of a copier because there's always a big variable. And that's number one, but also for futures, the reason why I don't want to do it for futures is I don't want any ghost pending orders. So like let's assume that it didn't delete it properly. We don't want a ghost pending buy or sell limit order that maybe didn't get closed. So it's execution only. When this is in, this is in. When that is out, that's out. And it worked pretty well from Forex and to futures. Worked pretty well. Here we go. Here we go again, guys. I know Robert's going to try it. I know quite a few. I think David wants to try it. There's quite a few FX traders that I think are going to do exponentially well. just pick one prop firm and only take your scalps on it. We like this as a trade. So we came back up and retested the moving average, came back up really close to the 2 minute-ish range. We've closed bearish, retested, closed bearish again, and this candle is failing to get above. Now, granted, we're floating above that VWAP, so we really want to get below that, but we're also below the point of control, so we like that a lot, actually. And gold's pushing up, which might give us some traction. Beautiful. 1, 2, 2.5 to 1 to about 4.5 to 1, depending on where you're putting your stop loss on that gold drop. We've got one candle that closed out of the range, and now we're waiting. We wait, we wait. This candle closing is not giving. Is it me or is this price action look a little different? Oh, that's the 1 minute. 2 minute. And gold looks good. Gold looks like an easy buy. Not forever, just to buy up to previous levels. While we wait on NQ. We've got our close above. Granted, we've got two pretty spicy candles, a little imbalance here, a little imbalance here. Let it come back and then still close bullish in any of these zones. And you've got yourself a really good confirmation to take a trade. That looks, I think it kind of come back a little bit. Even just taking these highs, because this right here is yesterday's close. So very likely to tap at least into that area. That's yesterday's high, close, and high. You don't need that much out of it, but to kind of give you an idea, at least tap into the yesterday's close. It's not a bad trade at all. And then NQ, we're getting that confirmation. You can wait till it gives the VWAP, but otherwise I think you've got a pretty good sell. I still think there's like a lot of percent to the downside. It's a different account, but this is Take Profit Trader. I try not to keep every single thing on, well, first off, you can't anyways, because they don't allow that many connections. So gold's really good. Coming up on 3 points. And then NQ, let's get that up off. I really wish my entry was right there, but it's not. So now we're gonna let it pull back up. Otherwise, we've got it. Too easy. Too easy. Trading is not too hard. Some days are choppy, but some days are just stupid smooth. This is one of those stupid smooth days, which is nice.
Morning, Miss Jenny.
Good morning, sunshine. How are you?
I'm good. About yourself?
Wonderful, other than tech stuff. I came in here with like this great attitude and great mood, and then everything like froze up and stopped on me, like, okay.
Yeah, I've been having that issue also. Quick question for you. Do you trade on Trade Locker or have you ever traded on?
I don't know a lot about Trade Locker. I would like to, it's on my agenda to learn, but I don't right now, mostly because my priority has been getting some of this future stuff working a little bit better. Once I have that, because remember the automation, I also want it to work really well through um Ninja Trader. So that's kind of a big deal too.
Yeah,
Once
Ninja Trader's been difficult for me to get set up. I've been trying and trying. It's just, but the reason I asked about Trade Locker is because I had Hero FX,
uh-huh. Oh
and,
wait.
and
Yeah,
then I had to reload into it, and it turned into Trade Locker.
I have
And
Hero
it,
too.
uh,
I have Hero too. Yep.
Yeah, and it's the platform is Trading View platform.
I don't know much about Trade Locker, so like I wish I could help, but there are just there's such a vast array of platforms. It's funny how peacefully we made money without having to know about Tradeovate, Ninja Trader, Trade Station, Trade Z, Trade P, Trade Q, trade, you know what I'm saying? Like we didn't have to know any of that. We just made money peacefully. We picked a stable platform. So if you like the way it's looking, by all means, watch all the YouTubes, get all the research and get good at it. Trade Station's probably low on my Trade Locker is probably low on my priority list for me as a personal trader. Again, mostly it goes back to that ATM. And not just because Scott's listening, but I miss the ATM. I miss the Swiss Army knife. Okay, the things that I use the most. The golden strategy I can use with or without the arrows. Okay, so this is not that hard to see or some variation of it. Very easy to duplicate. It's very tried and true strategy. But the stuff I can't get access to, right, is I don't let me pull it up off screen, is like the ATR. I can't see the average daily high and low. Remember, we used that as a target before, whereas that comes standard in the ATM or in the, sorry, Swiss Army knife. And then, of course, management. So for me, anything I can do to maintain MT5 at this point is still going to be my priority as a manual trader for whatever. And then beyond that, obviously, Tradeovate, Trading View. And then for bigger funds, I'm probably going to be going over closer to Trade Station because of how they do with some of their accounts and their leverage and their funding practices. So other than that, like automation, we wanted to get on all platforms, but we'll see. Do you like what you see or do you hate what you see?
No, I kind of like it actually. I just got it probably over the weekend. I just started looking at some YouTubes on it yesterday, and the platform seems smooth. It really does. I just been, I'm gonna set up a demo account and just kind of play with a breakout strategy and see how it works.
Trade locker. Well, it's on our list. So right now the order of operations for breakout is this strategy on here. Okay, strategy on Trading View. And then EA and strategy on MT5, hopefully simultaneously as EA and strategy on Ninja Trader, and then kind of go from there. So that's kind of the order of operations, if you will.
Right.
Then we can put Trade Locker in there too.
It seems to be very smooth. I mean, I was just watching it how it moves it, and it seems it's almost exactly like Trading View, so it's easy to understand. You know,
That
that's the biggest part with Ninja Traders. You know, man, this getting this platform set up correctly has just been like Jesus beats.
I
You know,
know. But for management reasons, if you don't have ATM, Ninja Trader still probably takes the cake for management.
okay. Well,
It's
I'm determined to get it set up. I've got it pretty much. I'm just trying to figure out how to get over to Trader Bait, and through Ninja Trader.
so can you log into, I don't know if you can from. Trade Locker, Trade Station. You can't log in to Trade Locker on here, can you? I thought that
Well,
was.
it says you can I haven't tried it yet, but they say you can go to Trading View and hook into Trade Locker. I just haven't looked it up yet. I just been playing with it on the platform and looking at it. Seems like it's very simplistic to use though, because it's almost identical. The trade actually, it's got the Trading View logo on the platform.
Yeah, TradingView leases out its platform. You know, other companies can buy it and include it on their websites.
Right. So I mean, that's what kind of caught my eye. I said, man, this is just you know a Trading View platform, but basically. Even though Trading View is, I mean, they're when you trade off of it, man, they're so delayed.
That's the reason why I
On,
don't trade on it, is it's just delayed.
yeah, I mean, you could be up two candles and then it catches up.
Yeah, that's. I just don't trade on this because it's very delayed, so it's not worth the risk. But so the Project X technically leases out TradingView too, doesn't it?
That I don't know.
That I think so, but I mean I don't know for sure. So
I was
this
just wondering if you traded on her or not. That was my biggest question because I just, like I say, it just popped up on Hero, and I'm saying, wait a minute now, how did it go from Hero to Trade Locker?
I'm so mad at MT5 like as a business. Like if they were my friend or my cousin, like we would have a word. This is an intervention. They owned a large percentage, and I know probably only in our perspective, but they owned a large percentage of the market share. And now I don't know if it's legalities because it's Russian made. I don't even know the real truth, but it feels like lesser companies are coming in and taking portions of a market share that was never going to be theirs if all of this stuff didn't happen with Mediquotes. But now everyone's taking it. And some of these companies are, if you looked a few, however long ago, a lot of these didn't have its own source. And this is just continuously expanding. And all these off-brand companies, these white label companies are coming in and taking over for what was already, that's just me being unable to let go. Market's
No,
up.
you're right because since AAFX and Hugo Way, I mean, it's just been those were my go-tos, and since then, it's just been kind of, hey, I'm just kind of trying to figure out how to maneuver in this environment.
I wonder if I log into my Ninja Trader account, it would let me manage all the other Ninja Trader accounts. Unless, well, I guess if had the copier turned on, that allowed it to trade from here to there. But yeah, there's just so much, you guys. So much. But again, it's a vast industry that we work in. Once you find a lane, definitely pick a backup lane. It's smart if you're going to take a, cross country trip to have your major route planned out, but have some alternatives, right? Before there was Apple Maps and everything, that's what we were taught when we took road trips across the country is you print out your actual route, and in case something happens you need to know some other basic highways that you're looking for to get to that location. So same concept here. To me, pick your lane. As you guys noticed, I stayed completely loyal to a broker for umpteen years. I wasn't a broker hopper. I just was never that person. I found a lane that worked. I still had some backups, okay? And then I just stayed there happily, comfortably, withdrawing, doing my thing. So that's the same thing we can do now. Because also the amount of misinformation, white label companies, pop-up companies that literally are costing less than most of you guys are spending on prop farms. Some of these pop-up companies are less invested than you are in buying the prop farms. So on that note, just pick a couple, be safe. I don't know. People say that Tradeovate is a good broker. I did not have that experience. As a standalone broker, they didn't let you trade with 800 bucks. They wouldn't let you trade with 1,200 bucks, but somebody else said they did. Trading Ninja Trader does though. So I can't say. Do your own research. I like AMP. I hear good things about Optimus, but I don't have them. Do not have them. I did take this same trade though on the 5 minute management using ATM on my MT5 broker, which will link into 2 other futures accounts, but it'll be closed by the end of the day. I'll be right or I'll be wrong. It's a very small amount.
Oh, nice thing about AMP is their low margin rates.
I know. I haven't found anything close to that. And then people say that to there, Scott, but I have that has not been my experience.
Well, Ninja's not bad.
Ninja works, but I didn't get Tradeovate to work. And some people, I think it was Trader B who said they had low margin requirements. I said, I don't think so. At least not from where I was coming from. At least not from there. So
Yeah,
let's,
overnights are, I believe, are the same on every futures broker because that's set by the National Futures Association. But the day trading margins are vastly different between brokers.
okay. Well, we got our good trade. Even gold turned out pretty good. Gold I didn't mirror between lots of accounts. I just took it on Take Profit Trader. 275 on that trade, one trade. Yes, it's trading minis, but it's a bigger account. And that one's past its buffer. So I can take one manual trade, manage it well, and then that's it. Just this is not that hard. So I do have another class tonight. I'm not going to over trade. I've really gotten much happier taking care of other business than over trading because over trading just ends up mostly because of the rules. Like Apex, I'm going to maintain. I've got 20 PAs now. I've got, I don't know, maybe 10 more passed in just waiting. And then I think maybe 10 more on auto build that are going to come out in the next few weeks or whatever period that's in. But as time goes on, I'm deactivating any of those rebuilds because at this point they wanted videos, they wanted text, they have one rule after another rule after another rule. And like some of them I had never even heard of until I got an email. I just didn't even know what it was. So it's just such a pain in the butt. Whereas like with um my funded my funded futures, Tick Trader, Blue Guardian, obviously Take Profit is my go-to. They all pay out. Like they're not asking you how you traded. They don't this whole way of doing it. Yes, I want the $1 million payout. That is the goal, but it's a lot. It's a lot to contend with. And every time you do a little bit okay, they're like, oh, they have no problem taking the money on the time you mess up. No questions there, because they're getting paid regardless. But all the prop firms that I do know and love are in the link tree. They are going to be on the website. There's a few that I have tried, and as time goes on, maybe we'll have a little paragraph at the bottom of the website that says that like gives a screenshot to say, here's the 10 trades taken, here's where they fall in room of fees, in room of slippage, or whatever you want to quantify that as. There's a few of them that I don't talk about or don't recommend because they always fall to the bottom. It's like every broker on the day will be up or marginally up or whatever, whereas these ones will be literally down. Literally, they're so far off in terms of price action, just not worth trading there. It's not worth me putting there's so many places to put your money. And of course, I'm a big advocate of put something in your own account. And that's it. That is literally all on the day. On the day, just to kind of see what that looks like. It's not perfect, but those are the 2 big accounts, and they all mirror to be like $160, $100 on each account. Doesn't break any rules, perfectly easy peasy. The ones that are $100 are supposed to be flip accounts because it's supposed to be getting a payout, but we'll see. We'll see. I'll disable those for any future trades on the day and then go from there. This trade, one entry was a little bit late too. Second entry, I didn't personally take the second entry. Did close below pre-market low, but failed to stay there. So barely closed below with no extension. Now we're coming right back in. We're still really sitting in that 15-minute range. But if we stop looking at this from such a tiny time frame, we've got our little break of structure. We've got our retest. We've got how many minutes left on this candle? Oh, there we go. It's 5 minutes left on this candle. I'd like to see this close at least below 50% of this candle. If we're closing 50% below that 945 candle, I'd still be looking for sales. If not, we're kind of just scalping this back up because we're tearing to the upside with no good reason as to why to look for bigger picture long-term sells on our FX stuff. I need to get below yesterday's high, yesterday's close, and or this area of interest, right? There's an imbalance here, yes, but also this is a key area because there's like 5 things here. We've got yesterday's close, we've got an imbalance, which would make this the purple color. And we've also got what we would be calling an area of interest here. So I'd really want to get and close below this level. But if we're kind of keep scalping down, this is going to be the major target, is to take this low, take that high, and then see what happens. So don't do Hikinachi. And boom. Boom, baby. That's it. Anybody have any comments, questions, or things that you want to go over? What's the minimum suggested amount to start with to be able to trade? Oh, you can trade MES. I would say $500. You can technically trade MES. I would honestly tell you 1,000's better. I like AMP. AMP has a really low margin requirement. There are other people, just to be 100% honest, who seem to really like Trade Debate as a broker. I don't think that their fees and margins are better than AMP. So, but AMP does one thing that I don't quite understand. It's on my to-do list this week is to message them. They do this thing at the end of every week or maybe every day. Yeah, every day, where they call it synchronization. What is that? Who knows what that is? But basically, they're making a deduction on my account. They're like synchronization, $58. And I don't know what it is. Scott, do you know what that is? It just says synchronization.
I'm sorry. Did you ask me a question?
Yeah, on AMP, have you ever gotten that correction slash synchronization?
I'm not sure what you're referring to.
Sorry, on AMP, if you go to your history, do you have any portions where it says type of order correction, synchronization, and then it gives you a positive or minus, deduction or a credit?
No, I've not seen that.
I see it an awful lot. I think once a day.
Yeah, I'm not trading a live account on AMP, so
Yeah, I see it about once a day, guys. So that's probably my only question with them. Otherwise, I like them as a broker. They're very difficult to get approved. I'm not kidding. It was kind of like maybe trying to, I don't know, buy the
I don't
Brooklyn
know. I was
Bridge.
same day or next day.
I am not the only person that had this problem. Even I think it was Donna I was talking to or somebody else I was talking to that was like, look, just Bariga too. Like there's quite a few people who have just been through it trying to get approved with that broker.
Hmm. Yeah, mine was easy peasy.
Yeah, but I don't have any like normal forms of income. Every form of income is comes in through a different method. So I think that's also why they were such a pain in the butt. Plus, I work with and or for, companies that quantify themselves as trading companies, which just make a whole nother level of a host of a problem.
Right. You were going in as a professional, because of your licenses and whatnot. And
And then
I was coming in purely retail.
the licenses were a second set of prob. That one I can on that level, yeah, so many things. Licenses are so much fun, you guys. So much fun. That's it. That's it. That's all we got on the day. So hopefully that helps. Honestly, I'd say 500 to 1,000 bucks. You can technically open, I don't know for sure how low it can go, be at low 500, but I'm pretty sure you can technically open like an MES or an MYM on a little bit less than 500, not by a lot. But I don't know exactly what those levels are. I think like three something is still okay, provided there's no major news. But honestly, I'd say 500 to $1,000, trade just one. You're getting out and getting in quickly and just kind of milking it up to
I'm
get
sorry, I was not tuned in for a while because Wendy was wanting to talk about today's schedule. So I had you guys turned down. Did you answer Sandra's question about minimum suggested on AMP?
that's what we were just answering. Yeah. What, you got some feedback there?
Yeah, realistically, if you want to try to keep your risk low on that, I would say that you need to have $10,000 to trade micros.
10,000. Okay, yeah, that's way different than what I said. I said 500. You can technically open up an order under 500.
Yes, you can technically open up an order on $50. But the question is how much drawdown can you withdraw with that? So if you're trying to keep yourself to 1% trades and you know over 1% is pretty easy with one micro contract, depending on where your stop loss ends up.
I don't think you can do yeah, if you have $10,000, you can do 1% trades, but if you have less than 10,000, you're not doing 1% trades.
Right. So it depends on what you're trying to achieve. If you can withstand, 10%, you can get by with less. And if you put any amount of money into the brokerage, it doesn't matter what it is. Let's say it's $500. You can then in MT5 create your own demo account. You do it right from MT5 and say you're opening a new demo account, and then you tell it what you want for your deposit. So you can try $500 and see what it trades like.
So kind of to find a balance in between, technically, yes, you can trade a little bit with $500,000. Technically, you can open a position. But Scott's not wrong. 5,000 to $10,000. I think what we've talked about before today has been if you want your own account, you need at least, I mean, bare minimum 3 to 5,000 for futures. And if you think about it, if you notice what they give you for drawdown amounts on all these 50K accounts, it's pretty much $2 to $3,000. Like that's kind of what you're getting with them as well. It's all you're getting. But so for $100 at Take Profit Trader, because it's still 40% off, you're getting what, 2,000 or $3,000 worth of drawdown to go practice those micros. The only problem is you can't practice that on MT5 per se. So, but still, that's land in the middle. I'd say 3 to 5. 10,000 would be much smarter. But if most of you guys, well, there's a lot of you guys who are using 10,000, but you're not using it in that way. So just just to give you well-rounded advice there. Very, very well-rounded advice. This is not the spreadsheet I had up on my laptop, so it's going to look a little different than what I was doing. But to kind of give you an idea, figure again, if you have a $1,500 account, you're not doing 5% risk because most of the trades are going to be more than that. If you're trading on the one or the, well, 1 minute probably, but the 2 to 5 minute, you're probably going to be closer to 7 to 10%. Doesn't leave a lot of losses. Notice how this is only set to 65% accuracy. Okay. Figure again, if some of the trades are closing at 0.5, 1, 2, 3, 4, 7, 0.5, 2, 3, 4, 7, and you have -7 on the other times at a 65% accuracy rate, that is insane on 70 trades. Oh, that one's too big to even discuss. That is 7 figures. Hold on, let's redo. Maybe better. So 6 figures, okay? Much more, much, 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 much more practical. Not to say this the 7 figure thing can't happen, but it's just very, very impractical. So with this is literally about a month of trading. 72 trades. Figure taking 2 to 3 trades a day, 4 to 5 days a week. So 3 is 15. So 3 to 4 trades a day. That's what's possible. It's not easy though. But notice how this is not needing some kind of 90% accuracy or 80% accuracy. Notice how this is only a 2.2. And remember, on the different spreadsheet, figure 1 out of every 10 is going to close at the full 7. Okay. Based off of the settings and kind of how I'm setting it right now. That's kind of fugly.
There's another thing to consider in all of this too. The calculations in this spreadsheet, I know because I wrote it, are going to give you percentages of lots as your entry size. It's going to risk 7% because you said you're risking 7%. However, one micro might be more than 1% or more than 7% rather, depending on where your stop loss sits. And so it's going to be by how many lots you're doing in whatever you're doing. So there's going to be rounding errors here. So some of these may be bigger or smaller than what you're looking at starting at $1,500.
But if you have good management, so this is kind of what I was testing. I went through over 100 trades just to kind of get something that looked like this. Figure again, 1 out of every 10 is going to hit that full amount. Okay. And even then, we could say six. Okay. Just to kind of show you, that's fine. 1 out of every 10, 1 out of every 20 is going to actually, you're going to catch that big run. Basically, you're going to catch that move that just happened to be perfectly smooth, no retracements, no pullbacks, whatever. One out that's not that much. The rest of the time you're going to get knocked out somewhere with a 2 to 1, a 1 to 1, a 0.4 to 1, a 1 to 1, a 1 to 1, a 3 to 1, a 2 to 1. But the way this is going to average out is going to be somewhere, averaged out. Doesn't mean you have to achieve this every time. And I'm not factoring in losses because those are already factored in here. Okay. So figure you have 72 trades, of which X amount percentage of them are losses. You have all of these trades. Some of them are really good. Some of them are not so good. They just barely are above break even. Okay. Figure in a month's time, that's about what that looks like. That's possible. And before we think, let's use Scott's error reason for an example, but figure there's error, human error, digital error, all kinds of other errors. There's only two ways I would look at this number. Number one, I would look at it minus 20%. Okay. So I'm always factoring in an additional 20% based off of any projection. Because to me, that's that buffer and it just keeps my mind peaceful. It keeps my expectations in check. So figure 80% of this, still not bad, right? 80% of this still not bad at all. But with big things like this, I don't even do that. I would say, look, if you fail at this by 90% and you were able to turn $1,500 into, let's just say, $30,000 or $50,000, that is still not a bad month. Okay. Not a bad month at all. The hard part is when you don't see this turning into this, and I think that's why people don't like trading, or they love the idea of trading but don't like the action of it, is because this on week two, if you're doing really well, is going to look like this. And it's going to feel like you've spun your wheels and you're thinking, well, this isn't even enough to, do anything. It's just not. But I'm completely obsessed with this spreadsheet. So, and that's one account, right? Times 5 accounts once I post them in. Amen, Robert. Yeah, this is one account. So here, if we wanted to put this more on prop firm basis, this is what it would look like. You have a starting balance of 2,000, okay? Remember, you have to get past the buffer anyway, so I really should decrease that, but I'm going to keep it at that. Let's say you're risking about, and this is to kind of tone it down on purpose, 2.5% per trade. Notice I'm not going to put this at 80 because I'm a really good trader. I've got a 5, 7, 10 year track record now that says I can average 80, 90%. But when we're adding in all these technology things, as I stutter that word out, and mirroring things and brokers and Trade Evade went down and Project X happened and this happened or news happened or CPI rules, just to kind of keep it really down to earth, you're going to average somewhere in that kind of 60% ratio. And that's okay. Like, fine. 60, let's lower that a little bit. Let's do 63% accuracy. Okay. And because you're in a prop firm, there's a lot of psychology going in there because those numbers are a little bit different. But let's just do a 2 to 1. Okay. That's 54. Let's pop this around a little bit and get it as close to 63 as possible. And that's when I'll stop. 10,000. So if you have that set to 5 accounts, and notice I cut that risk in to a third, but times 5 accounts is still 50 grand a month. Again, going off of the 80% principle, now you've still got 35, 40 grand a month. Going off the failure equation to say, hey, look, I can fail at anything by 90%. Like if I can fail at this by 90% and just not blow in the process, you still are walking away with 10 to 15, 10 to 15 grand a month, I'd say. So when will we expect the system to be available? Which system, Tony? Which system? Gold's pushing up again. No, you can do higher risk. Like, because that's 25, do 3%. Hoping that again, you average that 2.2%. Yeah, that's a huge difference. Huge, huge difference. Gold is pushing up, my friend. I thought this is a Monte Carlo spreadsheet simulation. For anything automated, you wanted to do the 10% of this. For anything ever automated, you're looking for the 10%, view, because all you're doing is turning it down. Like, I kind of want to talk about this. There's another company that's selling their system. It's like a $3,000 to $5,000 buy-in, by the way. And then it's $400 to $500 a month, depending on if you use, which system you're using. Did you guys catch that? $400 to $500 a month, okay? Plus, there's more, okay? You have to have stuff like Pick My Trades or other kind of mirroring systems. And all they're doing is they're promoting that you go for 1% a week, meaning if you hit that goal, 1% on your prop from on a Monday. And by the way, when they say 1%, they mean 1% of, and hey, by the way, hold on, let me pull this up. There it is. So if you have a 50K account times 1%, they're talking about the whole account. They're talking about you stopping trading when you hit $500 a week. Most of you guys are not doing that. But my point is they're selling this service for 400 or $500. I can already tell you right now, their accuracy is less than the breakout system, way less than JGS well managed, and less than anything else we're looking to release and build and finish out. So I don't know how to tell you guys, no, this stuff is not perfect. Yes, it is possible. Yes, it takes some human tweaking. It takes some human oomph. Uh, but just so you know, the competition out there, this is what they're promoting. This is what they're doing. Like if it was me and I was using the breakout, I would tell you guys, you're on an apex or something, you're trying to pass that quickly, but everything else, you need 5 days or 7 days anyways to pass it. Or like, what is it? 2 to 5 days in general to pass it, depending on which firm you're using. So five, that's $500 a day. Fine. For passing purposes, you're going fast, and then after you're pass, after you're past the passing, you're going to turn it down. You're going to have filters on there that allow you to kind of stop trading for the whole week at that point to say, hey, I've hit X percentage on the week. Doesn't have to be 1%, but just so you guys know, doing that is going to help you maintain, like once you're funded and you've paid the activation fee, particularly with Apex, you don't need to be paying anything else. You don't need to be doing anything else. So that would be my 2 cents. Robert, this spreadsheet is available in the tools section of our Discord. And it might be, actually, we might have it on the website as well, under the tools in the back office. I'll have to confirm that with the team. It should be. It's like my video game. Scott made it. All it is, if you look up the word Monte Carlo, there's a book behind my desk right now, talks about this principle. There's a lot that goes into this or martingale. There's a lot of math and science behind it. Like the numbers don't lie, people mess it up. Okay. The numbers aren't wrong, people mess it up. And I get it because I'm human too, and I'm a girl, and there's all kinds of emotions, and trading is not always easy. And yes, it's lonely. Like, yes, it's hard, but this stuff is right. I know that there's fees. That's why I'm saying any number you see here, just look at 80% of it, because we're going to factor in for all those fees and the unknowns. Cool. But if you have, let's just say $1,500, you're going all in, you're risking 7% per trade. That's pretty high. This is wild to see what you can do. And it just hit F9 to recalculate it over and over again. All you do, you hit one good period where your trading is really awesome. So you're averaging a really high accuracy. And I'm assuming some of those have to be really close to the full 7%. Okay. I'm not 7 to 1. Otherwise, that's what's possible literally in a month. Now, is this practical? No, everyone would do it. But you have to understand some of the guys on YouTube that are promoting this $1 million whatever, they happen to have stuck with their system long enough to experience this month. And your system, regardless of what it is, can also give you this month too. Like, I don't
Yeah, the
know.
thing, oh, I'm sorry, Jenny, I thought you were,
No, no, go ahead.
what I was going to point out here is that, you're specifying a 63% win rate, and the simulation is actually coming up at 77%. And what that is just sort of the random sequencing risk. This column of random numbers here, there's a different random number generated for each one of those positions. And if the number is bigger than 63, it's a loss. If it's smaller than 63 or equal to, it's a win. And so you got this sequencing risk. If you get a bunch of losses early, you're going to have a hard time recovering from that. If you get a sequence of risks later on, you're going to look at really large losses in dollars because your balance is up. Ideally, you'd take 10 trades and, 6 of them would win and, it would be randomly or sequentially put in order, so that for every 10 trades, you'd have, just 3 to 4 losses in that kind of evenly distributed, but it doesn't always happen that way. It
It-
can happen that, you flip a coin 10 times and you get 10 heads or 10 tails.
Or even in your quote winning system, you're going to have periods where it's win, loss, loss, win, loss. And
Or
you,
loss, 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 loss.
yes, this is still part of your, well, wait, this is supposed to give me 70% accuracy. It can give you 70% accuracy. And I think Scott said that really well. But part of 75% accuracy or whatever means periods of time that look like this: loss, win, loss, win, loss, win, loss. You're like, I'll never make money this way. This sucks. This is awful. This is horrible. Especially if the management was, whatever, the win wasn't as big. But if you stick with the system, and I'm doing my own humaning math past that again, back to the whole, how did we derive this number? Because again, let's assume let's say 1 out of every 15, am I hitting that full 7 to 1? Okay. Only once out of every 15. The rest of the time, I'm going to get the 1.5, the 2, the 3, the 0.3, the 0.2, the 0.4, the 0.7, okay, the 5, the 4, the 3. When this averages itself out, it averages out to be about a 2 to 1. And actually it's a little closer to 3 to 1. What kind of I would be gearing for, but again, I'm trying to lowball. I lowball everything to the best of my ability.
Well, here's the first 10 trades. In this first 10 trades, we have 4 losses. Wow, this is just right around 60%, right? So now hit F9.
Hit F9. Hold on. Oh, I'm on my MT5. I'm gonna do it, Scott. There we go.
Okay, so let's look at this. So 2, 3, 4, 5. Now we're 50% on this one.
Hit it
And
again.
hit it again. But I want to find one that's looking either really clean or really dirty, So this one, okay,
That's really
this one
good.
is 80% win rate.
80% again. 80% again. Those periods of time are going to come. 80%, go figure. That's 60%.
Now here, look at this one. So now we've got 1, 2, 3, 4 wins. So this is a 40% win rate. And what did we win overall? We 62% or 63% is what we got overall. But we sequenced a whole bunch of losses early.
But this is a good thing true. This is a great place to kind of just showcase for a second. You've now traded 10 days or 10 trades, and check that out. you really haven't went anywhere. Better yet, with fees, you probably were at $1,600, okay, at the end of this period. And this period is when people are like, oh my God, I must find a new strategy. This sucks. It's never going to work. Everything's against me. The world's on fire, crying blood in the streets, because at the end of this period, and I don't care how you chop this up, if you're taking, 2.5% trades, or if this is one trade or one day, you're risking 7% on the day or something, like however you do this, this is where people mess up. But you stopping here is stopping you from getting this, because this is part of any winning strategy. The only difference between your retirement accounts and your IRAs and your 401ks is you don't see this. You don't get to call your broker and say, which trades are down, which trades are up, which stocks are doing this, because they would fire you. They don't want your 1% or 2.5% that bad. They don't want it. They'd be like, nope, this guy's got to go. He sucks. This is part of it. And this is hard, because if you start with 1,500 bucks, you lost money in and out on the, if you're transferring with cryptos, you got it in, there's fees. You probably have 1,600 bucks at the end of this period. And this is
And you were down to, 1390 at the lowest. So you had a fairly deep drawdown.
yeah,
In
that's
fact, you were
all.
underwater for most of that.
Is there any info that goes into ATR? Hold on. I hear you guys talk about that a lot, but I'm not familiar with it. I'd love to learn more. This group rocks, by the way. I'm now just giving it super encouraging. I love that. Thank you. You're my favorite person of the day, Robert. How much would I need to deposit to make 7 figures on Dragonfly? A year? Oh, I would have to pull up a different spreadsheet, but I can. We have some forecast. So wait, 7 figures in a year, or 7 figures over the course of like 5 years? Because I can tell you, with like 50 grand, well, I'm gonna round that to 50 grand from the forecasting, meaning forecast means the current results it's achieved thus far. Um, 50 grand is what, $1 million in 3.5, 4 or 5 years, give or take, depending on performance, right? To hit $1 million this year, you would likely need somewhere in the window of $200,000. And that would be pushing, well, because remember, they're also going to lower your leverage, anything above certain amounts on certain brokers. So if I had to guess, 150 to $250,000 to make $1 million in profit at the end of the year. Because you're also not splitting any performance fees or anything like that with anybody. So you could turn it up a little bit, but I'm also not counting off risk capital. So I'm pretty big on having off risk capital. I kind of got over my ego, or my need to, my people pleasing, assuming that you guys can't I saw this cool video. Sorry, I'm going off on a tangent. Squirrel. I saw this video. It's like, the more the people pleasers, you're pretty much telling people that you can't trust them with the truth. Like, it was pretty deep. So needless to say, in a spirit of good business practices, you need off risk capital. And that doesn't need to be a turnoff. And in my opinion, it shouldn't be a turnoff, because even McDonald's, in order to own one, you need to have one, right? If you go buy into the Chick-fil-A franchise, you need to have $250,000 up front, or I guess Chick-fil-A is a little bit different, but let's just say another franchise, you need $250,000 up front, and typically speaking, you need $250,000 or $500,000 in off-risk capital. Just to give you an idea, like, this is real, true, tried and true business practices across the board. It's not Jenny's opinion. So we have a system that will literally quadruple anything you're seeing in the gains for cryptos and QQQ, and definitely the S&P 500, and definitely your 401ks. You can 10x most of that stuff, okay? And it works, and it's possible, but there are some human actions to make a few times a year. We can't control that. And having some amount of off-risk capital and an investor's mindset is possible. Like, it's not possible, but it's required. You've got to do that. But to give you an idea, the math in my head is 20,000 in, you're pretty much making $5,000 to $10,000 a month, depending on whether or not you're choosing to take all the original investment out, okay? Or if you're planning on keeping it in and just turning it down. But basically 90 days to 6 months. So 3 to 6 months to being able to live off of 5 to 10 grand a month. And I'm talking, notice how I'm lowballing that. But we're talking printing money, you guys. So if it's, we got to plan for taxes and everything else, like, that's the things that we're writing in these little webinar classes we're doing about once a week, once every 2 weeks, for the foreseeable future, just kind of helping people get through. That's going to be a whole course load in there that just says, let's talk money. Like, let's be practical. Let's talk about the good, the bad, and the real expectations and how to get there. And yes, there are some people turning it up. They're making a killing. They're playing with crypto and indices and gold. A lot of risk, a lot of reward. Okay. It's only going to take one time for that to go against them. But either way, even those, there are people who are willing to fail. So we've seen stuff like this. We'll show it here. I'm going to say a 30% accuracy, 20% accuracy, but you're doing an 11 to 1. Okay. 20% accuracy. I might have to make that 25 just to make the numbers pick up. Um, just so you guys can see what that looks like. That's wild, right? What's that? I can't even count that high. 125,000. Like, this is possible, okay? Even with, sorry, even for the people who are like going, all in, you technically can do that, but you have to be prepared to fail 9 times out of 10 in that process in order to get to the time. This is, to me, a fail too, but oh, I broke it to get to this. So if you failed at this 10 times, the cost is 10,000. Okay. That's the whole point. So but hopefully that helps a little bit. All right, back to business as usual. We're gonna put this at 63. That's insane. We're gonna take the 25% risk off the table. Win rate. I'm just breaking everything now. Hold on. Huh. Win rate 7%. Okay, I got it back to fixed. And now let's go talk about if you have equity in your home, how much do I need yearly? iPhone. So we talked a little bit about this in the most recent Dragonfly call we did. I have admittedly never been a big fan of debt in general. However, I do also have to own the fact that that has kind of held me back in a lot of ways because I am literally the definition of bootstrapped, right? I'm self-funded, self-made. I've done a lot of great things in life with multiple businesses worldwide, from brands to companies to physical product to services. I've done pretty well. Like, I'm still not a bajillionaire yet, but for a single little mom of three, girl from nowhere, I've done pretty well. Okay. But I do admit not using outside funding or other people's money has always been, it's definitely holds you back because I can have a $250,000 project, but I have to fund that with my own dollars and manage my other life and manage my, all the things I have to manage, right? So I'm not against using funding. I would probably do something, especially with MT5 being a pain in the butt. I would probably do something like, actually, I was going to pull up the ATR stuff. You can get personal line of credit and equity line of credit. You can get a loan. And again, I went to the seminar. It was like, it cost a fortune. It cost more than, it cost a down payment for a tiny, actually, it cost the tiny home, cost 2 tiny homes. So it's about $50,000 to $70,000 to have entrance into this seminar with all these people. Okay. Most of the stuff they talk about is not super, super secret. It's just, again, the atmosphere, the connections you make, etc. The one thing that they did go over really well that I think stuck, and there were a few others, but if you're paying 24% interest, and this is just talking money for a second, 24% interest, and I've never once saw it this way in my entire life, is technically only 2% a month. Okay. So if you did use funding to help fund something to build it truly, truly well, figure you're paying 2% a month. Okay. Month after month until you have it paid off, right? And don't think that that needs to be the priority because it doesn't. And let's lowball it to make 15. What do you think the billionaires are doing? Okay. To make 20, to make 10. And again, you can technically average 40 and more, but I'm lowballing it on purpose just to kind of show a point. So the billionaires, they don't take a paycheck. They took stocks, they took a loan against their stocks, and they pay themselves interest. The rest of them, they do stuff like this. So the real estate guys, they took out a loan to buy a property. They put the property in the name of their 401k. They're this way it's not taxed, right? Everything they're doing, everything they're buying for it, it's completely a whole nother ball game because they're borrowing against other people's money. They're paying that 2% to other people. They place it in their retirement accounts and or whatever tax advantaged accounts that you have access to based off of your, actual life. Cool. This is all they're doing is they borrow the money, and I've just never done this. I've done everything by myself. I'd like to start though. And I'm not experienced here, so I'm not the person, but figure 24% is 2% a month. Would you pay 2% to make 15%? Would you pay 2% to make 20? Would you pay 2% of somebody else's money to make 7? You're still making 5% a month because 5% a month doesn't seem like much, but 5% a month on a $500,000 is kind of a lot of money. Okay. I don't know what that is, but
Which is why you never sell any assets.
yeah. And I didn't know that. Like I'm learning so much more. I'm learning how to get open to this. I'm not gonna say I'm there, guys, but you tell me, Jonathan, why do you never sell any assets? Tell them.
Well, you just explained it so perfectly. You borrow against any assets that you have, especially assets of high value that are going to appreciate over time. You borrow against it, and you can get a lower interest rate. Even now, what's been more of the trend is the personal like life insurance, whole life insurance pack, where people are basically becoming this. It's called self banking. You're putting your own money into your own life insurance policy that's tied in with the S&P 500 or equities, et cetera, and it goes up over time, and then you borrow from it at a lower interest rate to fund future business endeavors or opportunities that may present itself, and then you basically pay it back by the time it's due at a lower, interest rate. So you look at the billionaires and you look at Elon Musk's and the Bezos and all that. Anytime that they're buying or selling shares, a lot of the times, they're paper billionaires. They maybe have hundreds of millions of dollars, billions of dollars worth of net worth. But when they actually do need equity, they borrow or they take a loan from that actual equity that they have.
Because they're cash broke.
Yes,
And
ma'am.
They're
do a
cash.
quick web search for the Bank of You. It's a concept that's been around for a while, and there are books written on it. And that's basically what Jonathan's talking about.
That's it. Is do research on. There are a multitude of books. I'm not a big fan of the life insurance model, mostly because the interest rate is too low for what you could achieve if you did it in other avenues. Now, if you have an excess of wealth, let's say greater than, 6 to 6, say greater than 70,000 to $300,000 a year worth of money to invest, then I think it's advantageous to also have the life insurance plans. But honestly, from everything I've learned, you're better off filtering it through a multitude of other accounts because, and that's what I learned at that seminar, right? Is you're taking that money, and since it doesn't count as an investment, you're actually technically you're putting in $400,000 into the retirement account that can only take 10, but you're doing it in this workaround way that is it's just a different model. So the only qualm I have with life insurance models is they only give you like 6%, and there's so many fees. You're technically only getting like 2 to 3% a year, which I think is kind of sucky. But again, depending on where you're at wealth wise,
There's
it's
a tax. Don't you? You can correct me if I'm wrong, but from what I understand too, I believe there's some tax benefits to that as well.
yes, 100%. And it's, goes against your taxable income and stuff too. So, guys, don't listen to any of us, myself, Scott, Jonathan, or anybody else who's talking about this stuff. You need to check for you. This is not legal or financial advice whatsoever. I just think it's definitely worth looking at. So, back to this topic, and then we'll talk a little bit about ATR.
Yeah, just everybody's
Mhm.
risk tolerance is different.
Yeah.
And understand what you're borrowing money for. Run the thing on demo for a while before you commit to it, because it's a mistake that can come back and bite you in a big way if you are unprepared or if you have even the wrong settings. You play around with settings, you can end up screwing yourself up. So,
Which brings me, so one of the things we talked about on the last webinar thing we did was this, ready? It's much easier to fix these and remember, this is manual trading. Dragonfly is automated. What we're going to be releasing for breakout is automated. but it's way easier to mitigate risk on the front end, right? To come prepared than it is to fix when you get to down here. Okay. So I say that to say this, lowball it. Okay. Go for your 15% a month. Okay. 15% a month on other people's money, even if you're paying them back two or three. And I know the payment is sucky. And again, I've never been one for debt, so I'm owning that. But, and I do think a house is an asset. So I think a house is a place that we want to keep safe for me. And it's probably also because I'm a single mom. It's because I came from a single mom. I'm just, this is a little vulnerability here. We all have different levels of mindset to work through. To me, the asset I value a lot is a home. And I know that some of the wealth people say that's not even important and it's a thing of the past. But for me, my peace of mind is the home. So for your original, back to your original question of for my home, I wouldn't do that. For a second home, I would do that. For my investment properties, I would. Taking out a personal line of credit, I would. And that's kind of where I'm at for my personal boundaries and levels of risk, right? But the principle, easy, manage it on the front end so you are able to manage it on the back end if tariffs happen or life happens and the world goes crazy. You want to be able to manage that. And we have a system in place that will help you manage it. But if you are foolish up front and then get in trouble on the back, I can't help with that. No one can. You know what I'm saying? Like you have to be prepared for that. This is an automated trading system that trades in a market that is completely unstable and 100% chaotic. You have to be prepared for that. So hopefully that answers, and hopefully this is inspiring because this to me is very inspiring. Whether it's your manual trading you're doing on your own personal money or your own personal props or whatever, or you're talking about compounding long term, this is possible. It's just math. You can fail at this by 90%, and $20,000, $40,000 is definitely not a bad way to be. So,
There's one other thing I should mention on this spreadsheet since we're talking about it, and that is these two numbers right here, your win size and your loss size. First of all, it's not really percentage. I'm not sure why that's on the spreadsheet. It's whatever numbers. It could be dollars that you win on average versus dollars that you lose on average. It could be anything. It's just they need to be in the same unit. Okay. Now this is assuming a fixed management. So if you are variably managing, where sometimes sometimes you take off at 1 to 1, sometimes you take off at 2 to 1, and you have an average, it's going to throw off all of your results as far as what your wins are. If your losses are always at the same percentage size, you know, that's a nice fixed number, but there's some variation in wins depending on how you manage. So just keep that in mind.
good advice too. Very, very good advice.
Hey Jenny,
Hey,
I
Wendy, how are you?
oh I'm sorry. I was
No,
just gonna say I agree with you wholeheartedly about the like not using the house as a collateral because that's just not my comfort zone too. I'll use and have used other things, anything else, 401k, different things like that, or personal line, but I don't feel comfortable using the house. But like you said, it's just a personal level of comfort. And I kind of do want to research more into the be your own bank idea, but I would want to look into some of the other vehicles other than the life insurance as a vehicle. Maybe even, I mean, would you consider this Dragonfly as a vehicle? Or would this have to go into something?
well, so for now, because it's an offshore brokerage account for the most part, it's not when you withdraw it, you can put it into one of those vehicles. I consider it as a revenue vehicle, but I don't know if it counts as one of those in the same way that
Okay, so it's basically it would be an account. It would
yes.
be an account
This
that
is a source of revenue for you to build the rest of that stuff. Absolutely. So
okay. And where do we go to find out like how to sign up or more information about it? Is it just on the website, on your website?
yep, yep. And we're still, but just so we're on the same page. First off, there's massive discounts on everything because Miss Barika and our team has just worked endlessly to get everything running. I'll say again, I originally was intending on selling that for a lot more than it's currently listed for. And even the people who have on live money have made more than they spent on it in a month. Now, granted, they're not coming to the table with $2,000, okay? Some of these people are coming to the table with 10, 20, or multiple six figures, and I'm being 100% honest with you guys, okay? And again, back to the honest streak, none of this stuff is perfect. It's just possible, okay? That's all I'm offering is a possibility. I see people marketing stuff for $5,000, $10,000, $500 a month, like obscene amounts of money that are less adequate than what we have here. I don't care if it's the breakout strategy. I don't care if it's the Dragonfly. I don't care which one of the systems that we're releasing or are released. You have something at a very, very low cost, but also I think that makes people overlook the value of it. So just know the plan, everything on the website, we're going to have a course eventually. Right now, I'm still doing a call about once every 2 weeks, seeing what people need and how they're seeing things. Because I didn't even know people didn't know some of the stuff they don't know. So I'm being honest. So everything down from downloading, file naming, settings. The big things I want to talk about are, how to manage, how to mitigate. So we started to really talk about that this last call, which is again, turn it down up front, because then in the back end you have a lot of human decisions you can make, offers capital you can make. There's a lot you can do when you turn it up front. Okay, when you're trying to be all in up front, it's not easy to manage on the back end. So all of that stuff is there, and as the final product, it'll have tons of courses and every single thing else, and it's gonna be really, really cool. This is one of a couple different automated systems that we have access to, because I'm really big on printing money. The problem with printed money, though, guys, just again keeping it all 100%, is most people are trying to make too much. Do your manual trading, trade what you can, okay? And then have automated money printing you even just some. If you're getting 5-10% hands free, if you're getting 15% a month hands free, you honestly don't need literally anything else. Like, not to say you shouldn't diversify, because I think you should, but it's a lot of potential. And I'll show you the math that says, hey, $20,000 in, you're pretty much living financially free, or like enough to pay most people's bills across America with a $10,000 a month lifestyle within about 3 to 6 months, depending on which method you're using, whether you're taking out the original investment or whether or not you're just simply, hey, now I've got to this point of growth. Now I'm going to turn it down. So now I'm trading with less risk and less exposure. So I don't have to have as much off risk capital. But there's a lot of different methods. And no, you're going to run into a problem at least a couple times a year where just one pair is stupid. It's part of it. And some people are playing. They're playing with cryptos and metals and indices. And even that's going pretty well. It's high risk, but it's going pretty well. So kind of exciting. Kind of exciting overall. But okay, wait, there's one, sure, I'll save this. There's one more question. And Naz finally dropped. Sure. No, just don't save it, because I did a bunch of weird stuff to it. So ATR. So is my ATR guy still here? Naz is finally dropping. Look at that. This is the 15-minute range, guys. We're the original trade's still all very valid. If we were in Forex, this is still a great trade. We're just taking more entries and scaled out a little bit more than we have. But ATR guy, let's see.
Yeah, he was here 5 minutes ago.
I know, right? I know Scott posted a nice little article. So yes, he is. Perfect. So ATR, in layman's terms, all it really is the average trading range based off of the time frame you're on. So in general, the consensus is using the number 14, right? The last 14 candles. All that's telling us is the average size of the last 14 candles based off of the 15-minute time frame. The ADR, on the other hand, so average daily range, right? It's the average range of the last 14 candles, or whatever you have it set to, because you can technically set it to like 50 or something if you want, to say this is how much we move on average in the last 50 days. That information is very valuable, because saying we're going to go for 10 points, watch this. I'm going to go to the 5-minute. Okay. Look at that trade. Beautiful. Just got to be patient. Beautiful, beautiful. I'm still in it in my FX account, but well, actually my AMP and FX accounts, but not in my other stuff. Okay. Watch, we're on NQ. So if you would pretty please draw your attention to the top right of the screen where it says ATR value. Okay. Currently, 5-minute time frame, ATR value. I'm 90% sure this is set in points, but you can change that in the settings. I think when you change it though, it messes with this calculation. So saying I'm going to go for 10 points or 10 pips or something on a pair is the most stupid conversation ever, because everything moves very differently. And here's an example of how. I'm not going to change the time frame. I'm only going to change the instrument. So on NQ, we've got a first hour and a half or 2 hours of New York Open. That has an average of about 27-ish points, right? ES, on the other hand, let it load very slowly, evidently. Has an average of 5. That's a pretty big difference, no? Pretty big difference. Gold should have less. Have an average of about 3.5. Oil, and notice the value too. The value per point is different too. So we really want to know how much this is moving and what the contract size is actually buying or selling us, right? So this is only got an average of points of 0.14. YM has twice as much as NQ, but it's worth a quarter as much in terms of value, right? So this looks like a beautiful move, and it is, technically speaking, like it's awesome. But the value per point is different, right? So this might have moved 50 points, but it's only $5 a point, whereas this has moved almost 30 points, whatever, but it's $20 a point, right? This is super, super relevant information. So back to your original question, how we use it. You can watch a couple YouTube videos on it. I think for all the dumb things we watch YouTube videos on, I don't think this is one that needs it per se. I don't like the view. ATR, average true range, okay? I call it average trading range. I don't like this view per se. I like to have it in a box, like what we have on Swiss Army knife, for example. But this will kind of show you, this is all overnight. The average trading range was pretty small. These things are in the way. Hold on. There we go. Just so you can see it. On average, we're moving about 9 points or whatever per 5-minute candle on average in this period. Then we, of course, we have what? We have the news happen at 8:30, if I'm not mistaken. You can see this go up. That's a pretty big, it's a 50% increase just in that news portion. So now again, we're going to float high because it takes time for that number to de-average out, right? To de-escalate. And then what do we have? We have a little bit of flattening out before New York Open, and then this is New York session. We're in New York session now, we're sitting up at 27. But you can also see what the volume spikes are too. So this is at 10, is it 10 p.m. last night? This is opening bell yesterday, right? You can see much higher volume in New York, lower volume in Asian. This spike in Asian was pretty wild. But it's really cool. I don't personally love this view of it. I think it's kind of a lame view. You can also see Friday had not a lot of volume. So Friday had less volume. It stayed a little higher, but even than what we're experiencing right now, right? Again, you have this huge spike at 9 o'clock, 20 o'clock. This is opening bell. So opening bell was kind of flat on Thursday. You can see we went up after opening bell. So kind of cool. But that's all this is. It's showing you the average amount the candles are moving, how much price movement we're getting over the period you have specified. Most people typically use 14 as the average. You don't have to. I do. I like 50 a lot. I used to use 50 a lot personally, but that information is important because when you're targeting, let's say 5 pips on a day, 5 points on a day where there's no volume, that's too many points. When you're targeting, when you want to have a stop loss of 5 points on an instrument that has an ATR of like 60 points, that's not a very big stop loss. You're probably going to get stopped out. You don't even need to know about the strategy. You already know because of math, right? If you're targeting something and don't understand the value of the ATR, so per point, and how many points on average this particular instrument moves at a time, you're going to go nowhere fast. So to me, it's like one of probably the most relevant pieces of information. It's way more important than your moving averages, your breakout boxes. Like this bit of information tells you what you're risking. It tells you how much you're going for. It tells you what's happening right here with this price action. The ATR is very low. The volume is very low. I don't personally have volume turned on right now, but you already know in this period, because of how these candles are forming. This is very low ATR period. So if I was to take this trade and then decide, hey, I want 20 points, I might not get it because we're in a low volume period. But if I actually know ATR and I decide, hey, I want to take this trade, we're trending up anyways. We've got a nice JGS retest. We've got confirmation. We've bounced off and formed bullish. Cool, I want to take this. It's a nice flag formation, however you want to define that. Cool. You only want to go for 5 or 10 points? Well, that matches the ATR at the time, so you'll know that's a good idea. And your stop loss will be a lot more relevant too. So kind of cool stuff. But does that answer your question? I think for all the dumb stuff we learned, this is something you should have to know. I wish babypips.com, which is supposed to have like everything for, I know for Forex per se, but like I think they need to have this. Hey, you want to trade an instrument? Pick a strategy, know the ATR and the point value of that instrument, know how much you want to risk and how you're going to manage, and then that's it. It's really everything else to me is secondary, but that's kind of primary level of information. But yeah, ADR is average daily range, ATR, average true range of the time you're on. You'll notice if we click through, and that's it. So watch how and that's the other thing. If you're entering off the 1 minute time frame and you're trying to go for a huge ATR, you guys, not to
Yeah.
say you can't get like a sniper entry on the one that's based off of the 1 hour, but that's another thing too. Scott, I
And
heard.
ADR is the ATR on the daily time frame. That's all it is.
Yep. Beautiful trade though. Coulda, woulda, shoulda. JGS and then back down. But that's it. I caught gold and I caught NQ. I did not catch the entirety of the move, but for prop firms, I don't need to. I don't want to, more accurately. I do want to, but they're not going to let me anyways. So somebody's going to tell me no, and I'm tired of no's. So, beautiful trades overall in the day. We do have a live tonight free on YouTube, where the link will be posted in our Discord. Come hang out, ask questions, because honestly, that's what we're here for. Trading is lonely. Somebody else who's kind of a big deal is, that's the theme lately. Trading is hard, but even once you're good at it, it's very lonely. Like, what else are you gonna do with your day? Like, take somebody who maybe stays at home or takes care of somebody they love, or is a parent, so they're still a little bit homebound, at least for like the major parts of stuff. The whole purpose of this is community, guys. So come hang out, ask your questions. If you made money today, please go put it in the chat. That would help a whole bunch. If you have questions on breakout or have any further ideas on the automation, some of those final rules, think equity manager, think the thing you wish was there, please do reach out to me. And I think that's about all we've got on the day. So that is it. Happy Tuesday. Guys, go do something fun for a little while. I'm gonna go get a Blue Lotus drink, which is like a plant-based energy thing. It's got like ashwagandha, I'm probably saying that wrong, B12, vitamin D. It's all natural and it tastes like heaven. And this new coffee shop just got it. So, very excited about that. That's what I'm gonna do. And then I'm gonna wrap up some business things. So this trading session tonight will be located in the Discord and or on YouTube. So make sure you like, comment, and subscribe and do all the things that make YouTube happy. If you have not already done so, go check out the website, sixfiguretradingcoach.com, for anything, breakout strategy, Dragonfly, all the things that you're looking for. All of them are going to be back there. Maybe I can see if the team will build out the automation stuff too, so that they can get that tested, because we are really close. Robert, it is lonely. It's hard when you're learning too. And it is a great community. I know. Honestly, most of the people on here, we're the coolest. They're the tried and true, the diehards. They're the people that, they're definitely invited to my wedding or my funeral or my trip to Bora Bora, or I don't know. Let's go to the Dominican Republic, and that sounds nice. Most people in here are just, they're good people. They're amazing people who I like as a person, which I think is the best part. The best part for sure. But okay, happy Tuesday, guys. We'll see you guys tonight. Happy